to record. Okay. Yeah. Okay. So today's agenda for the classes, we'll have a look into how the order to cash cycle works, which is also called as O2C. Then we'll look into the overview of accounts receivables, then the key flex fields in AR, then the receivables accounting event model, auto accounting structure, invoices with auto accounting rules, and statement cycles. Okay, so shall we start? Yeah. Yeah, okay. So order to cash also, which is known as O2C, refers to the set of business processes for receiving and processing customer sales orders for goods and services and their payment. Okay, so these processes are at the heart of all businesses, and unless they are managed efficiently and accurately, organizations would not only face financial problems but also reputational issues, right? So every department in a given company is affected either directly or indirectly by the order to cash system. Now just let's look into the steps of the order to cash cycle. See, the cycle begins with the system receiving orders from the customer. Okay, this could be via your email or internet, salesperson, or fax. So in some businesses, the order could be simple purchase request for a particular product, while in other service oriented or wholesale businesses, the customer and the company would enter into a long term or a short term contract. All right, then the company might even conduct a credit review of the customer before accepting the order, especially if they have plans of offering the customer a deferred payment option. A deferred payment meaning it is a postponement of a repayment. Okay, so you are aware of what a credit review, credit management is, Shrikant? Credit review, you would have heard, it's a very common term. Shrikant?
Yes, ma'am.
What is meant by credit review in a general sense? When even like in a normal scenario, when a person goes to the bank to get a loan or something, usually a credit review is done. So what is meant by that? What is meant by credit review?
Reviewing after the payment is done.
Reviewing. Okay, see, credit review is basically you're checking the credit worthiness of a person, of a company. Okay. So it is basically to check to see whether the party is suitable to receive financial credit or not. Often it
whether
is,
he can
yeah, whether he'll be able to
pay
repay.
or not.
Yeah, so that
Yes,
is your credit worthiness. Like say for example, a customer goes to a bank, usually he's been given a CIBIL rating, right? So depending on your CIBIL rating, you'll be given a loan amount, right? So same check even a company needs to do for its customers. Okay. So what it does is it's basically a credit check is based on the reliability in paying money back in your past, how you have paid the money, repaid your suppliers and all that. So all this, basically you assess a company's financial health with big data. Okay, big data is a company where large diverse sets of information from a variety of sources is available. Then you can also review a business credit score by running a credit report, or you can even ask for references, or you can even check the business financial standings. The financial standings means it's a financial position, basically the credit score. Okay, depending on your balance sheets and all that. Then you can even calculate the company debt to income ratio. This is usually the finance department. There's a credit department, which does a proper credit. So before, getting into a contract. All right. So that is your credit review. Then the order is, once everything is checked and, they proceed, then the order is documented and the company begins the task of fulfilling the order. Right. Then once the product has been, shipped and delivered, or the service has been fulfilled, the most important stage of the cycle begins with regard to cash management. Okay, it starts the invoice is created and sent to the customer for the payment. After the customer has made the payment, the accountants note the entry in the general ledger, and all the data are then used for report generation for better decision making. Right, and your accounts receivable, all the payments are invoices, receipts are created when the payment is done. And if suppose if still the payments have not been received, there is a separate collection department which is into focusing on to collect the payments from your customers. All right, and at the last stage is your reporting, okay, where you generate reports for a better decision making of the company. So this is basically a overview of how the order to cash
Ma'am,
life cycle. Yes, sir. Hello.
ma'am, ma'am, myself, ma'am. Ma'am,
Yeah,
can I
yeah,
get? Ma'am, I have doubt in this.
yeah, yeah. Tell me.
Ma'am, if whether the product has been managed, sorry, damaged, how it will?
Sorry, yeah.
If the product has been
Huh.
damaged in this, ma'am,
Hmm.
how to
You are
we need to contact?
you send it back. Yeah, you send it back. You remember during the encumbrance cycle, I had even mentioned, where receipt of goods. When your delivery of goods happen, you in fact check whether the goods are in a proper condition or not, right? And then if suppose if there is any damage, you return it back and you pay only for that particular amount of how much ever goods that you have, products that you have received. Suppose say you have had ordered for 100 pieces or units of some product. Okay, so in that, out
Okay.
of those 100, say 5, say 10, 10 products are damaged. Okay, it is either leaking or the packaging is there's a default. So what you do is you return those package back, right? And then you'll pay only for that 90 pieces that you have received. So that is where all your difference of the what do you see your if you remember, you had we used to reverse the entries.
Ah, yes, ma'am.
Yeah, you reverse the entries. You would have created, okay, for a certain amount, say 20,000, out of which 10,000 products are like amount is damaged. The product that you had ordered is damaged. So what you'll do is you pay only for the 10,000 rupees, the product that you have received, and the remaining 10,000 you'll reverse it. Say like even in Amazon, for example, you order something, right? So you by chance you have received a damaged product. What will you do? Will you keep it with you?
No, ma'am.
No,
Right.
right? You're gonna return it. Okay, the guy is gonna come collect it, and once it has been, the report goes to the the office or wherever whoever is taking care of it. Then they put an entry saying that okay, the the product has been collected, and then the whichever the supplier was who sent the product to you, he will do a refund, right? So that usually process takes about say 4 to 5 days. Right, same thing happens in the company. So you have to think in a bigger aspect
This
here
it
with.
comes under reporting, ma'am, or
So
in which
reporting is a
process?
final reporting.
Okay,
Reporting is
okay,
your this accounts receivable stage and the collection stage. In between that, it all this happens, when your invoicing
okay.
is happening, and then finally they will have a payables, right? In the payables you'll be like checking uh, the customer. Suppose we have given the goods to the customer, right? So they will have the payables with them, right? They will also check. They will have an accounts payables department there, so they will also check when the invoice is created, and when the delivery of the goods happen, they will also do a check. So depending on the good products or the damaged products, whatever they want to return, they will return it back to us, and they will do the payment only for those products which are which they are satisfied with. Okay, it's the same thing as an individual when you're ordering in Amazon. As I just mentioned with the example, same thing in a bigger scenario, you need to think in a company's context. Yeah, is your doubt clear? Yeah, I think sir had in detail in detail he had explained it to you, right? I
Srikanth,
remember.
Ah, sir.
ஸ்ரீகாந்த் ஞாபகம் இருக்கா? லாங் பேக் எடுத்தேன் ஆர்டர் டு கேஷ். அதுல இதெல்லாம்
சார்
சொன்ன ஞாபகம் இருக்கா?
ஆர்டர் டு
கிரெடிட்
கேஷ்ல
மேனேஜ்மெண்ட்.
இருக்கு சார். அந்த 4 சொன்னீங்க, 4 மேனேஜ்மெண்ட்
ஓகே
இன்வால்வ்
ஓகே
ஆகும்.
ஓகே 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 ஓகே. அதுதான் மேம் அத உங்களுக்கு இது பண்ணிருக்காங்க. ஒரு பிக்சோரியல் ரெப்ரசன்டேஷன்ல உங்களுக்கு ஒரு ஒரு கான்செப்டா எக்ஸ்பிளைன் பண்றாங்க. புரியுதா?
ஓகே ஓகே சார்.
சரி, ஒரே ஒரு क्वेश्चन மேம். சாரி.
Yeah, no problem, sir. No
Hello,
problem.
ma'am.
Yeah, no problem,
Yes,
sir.
sir.
Yeah.
Just sorry for it.
No
Only
problem,
one.
sir. No
Srikanth,
problem.
from this slide, what are all the applications involved?
Oracle order management application, account receivable application, cash management
Good.
application,
Very good.
stock management வருமா சார் இதுல? Stock management, inventory
management. Good. Excellent. Good. You can, ma'am, you can.
Yeah, okay, fine. So, hope your doubt is cleared, right?
Yes, ma'am.
Okay, yeah. Okay, so we'll just move into the next part, the overview of accounts receivables. See, here Oracle Fusion Receivables provides integrated functionality to perform most of the day-to-day accounts receivables operations. So receivables functionality is managed via 3 overview work areas, which are your billing, okay, and then your revenue management and your receivables balances. Right, so all 3 work areas provide access to general ledger account activities, like including or creating your accounting, like creating manual journal entries and reviewing journal entries and all that. So just let us understand briefly about all the 3 work areas. So in your billing work area, this area helps to perform tasks related to customer billing activities. Okay, so you basically monitor and review incomplete transactions and approve pending adjustments. So you use auto invoice to import transactions from other systems and generate invoices and credit memos automatically according to your requirements. Okay, then you can easily review and correct auto invoice, import errors, and resubmit auto invoice. Then you create new invoices, then debit memos and credit memos. You can also create a new customer record and manage existing customers from the billing work area. All right, next, after that, once the billing is done, then you will move into your revenue management work area. All right, so here what we do is we use the revenue management work area to perform tasks related to revenue recognition and revenue adjustments. So you run the recognize revenue program to generate revenue distribution records for invoices and credit memos that use invoicing and revenue scheduling rules. So to perform the revenue adjustments on one of the, I'm sorry. Yeah. Okay, so what is happening? Sorry, yeah. So then you perform the revenue adjustments in one or more transactions, including scheduling and unscheduling, reviewing, or even adding, and you'll be adding or your revenue contingencies and transferring sales credits. So basically your revenue management happens here. Can you just tell me the difference between what a receivable is and a revenue is, Shrikant? Your basic understanding. I'm not talking about the receivables. I'm talking just about your receivable and revenue. What is the basic difference? I don't need a proper definition. How do you understand what a receivable is or revenue is?
Where in receivables, we create invoices and receipts, ma'am.
Okay, good. Good.
Where in revenue, it completely based upon handling of the money transaction.
Yeah, good. Yeah, good. See, receivable is basically the amount owed to a seller by a customer. As you said, it's in the invoice, still it is being owed, right? Whereas the revenue is the gross amount which is recorded for the sale of goods or services, right? Yeah, that's really good. Your understanding is pretty good about it. Okay, and then you have your receivables balances. So we use the receivable balances work area to perform tasks related to customer payment activities and the management of accounts receivable balances. So you basically review, open receipts and receipt batches, your credit memos, your receipt remittance and fund transfer errors. So you create receipts manually, or
Hello.
you can, yeah, hello, yes, sir, hello. Is there any problem? Am I not audible?
Hello.
Yes, sir.
Yeah. Just 5 minutes back, it is not audible, ma'am.
Okay, fine. Is there any,
Hello.
Shrikant, are you able to hear me?
Now it's gone.
Yes, ma'am. I can able
Okay.
to.
So
Yeah,
you're continuously,
due to
okay.
internet state.
Okay.
Now, not continuous, madam. Just 2 minutes back
Okay.
only break. That's enough.
Okay,
Now
no
it's clear.
problem. Okay, no problem, sir. So you do, perform activities, wherein you will manage your receipts, you apply or you unapply, or you reverse and delete the receipts. Okay. So basically your adjustments and chargebacks during your receipt applications, and you remit and clear it. So this is, you can also even perform tasks related to managing account receivable balances, and during your period statuses. Okay, that usually you take care in your receivable balance work area. Okay, there's one difference which I would like to tell you is there is something called as receivable account. Okay, when we talk about receivable account, it's particular to a receivable account. But when we talk receivables, that means it is your accounts receivables module or option. Okay, so that is a difference that you should, always keep in mind. People might just talk about receivables. Okay, so that means receivables meaning it is your module or your option that you are referring to.
Okay.
Whereas when you're just talking about receivable, it is the particular account where all your receivable, invoices for the payments and all will be going and getting accounted into the account. It is the account. All right. Yeah. Okay, so this is how basically there are three workbenches, in account receivables. So under which all these functions are, catered for. And this is basically a broad, yeah. Who's this? Raj?
Sorry, ma'am. Sorry.
Yeah. Who? 1 second, there are two people who are waiting. Okay, it's Shankar sir, fine.
SSC
That's
Jayraj.
what I was like wondering who it is, sir. I admitted.
Hello.
Yeah, who is this SSC Jayraj?
Mr. Jayraj.
No, still
Oh,
he's
who
yet
is
to
that?
join. He's yet to join, sir.
Ma'am, join ma'am. Sorry for this.
Yeah,
No,
no
no.
problem, sir, Shankar
Sankar sir.
sir.
But new one SSC Jayraj. Please. He has put in mute, ma'am.
Yes, sir. But who is he, sir?
How he got the link? Who is that?
I am only, sir.
Oh, okay, sir.
I put in mic, that's right.
Okay.
Continue.
Okay, sir. Okay, yeah. Okay, so we'll move into again in the the overview of it. 1 second, I'll just current slide. Okay. So your Oracle Fusion Receivables provides a comprehensive solution for running day-to-day accounts receivable operations. Okay, so Oracle Fusion Receivables introduce something called as Smart Receipts. Okay, this is an industry, leading automated cash application solution that provide embedded intelligence and focused to do lists of transactions, receipts, and other activities requiring immediate attention. So basically, Fusion Receivables continue to support auto logbox. Okay, so auto logbox means it is also even called as a lockbox, which is a service that commercial banks offers the corporate customers to enable them to outsource their account receivable payment processing. Okay, so a lockbox operation can process millions of transactions in a month. So auto logbox eliminates manual data entry by automatically processing receipts, okay, that are sent directly to your bank. So you specify how you want this information transmitted, and receivables ensures that the data is valid before creating quick cache batches, because quick cache is basically used to review receipts and ensure that application information is correct. Okay, so you can automatically identify the customer who remitted the receipt, and you can use the auto cache rules to determine how to apply the receipts to your customers outstanding debit items. Okay, so this is usually managed with the bank. All right. And then smart receipts also help in creating and updating customer receipts. It increases user ability to process payment and send spreadsheets to review and approve. It actually sends the spreadsheets to the reviewers and approvers, okay, to do their job of reviewing and approving of the receipts. All right. So these are basically even in the other modules, Shrikant, I had mentioned, like even in payables, you always have a, manual entry, and you can,
Yes.
load via spreadsheet. So the same thing holds
That's
good
right.
here. Yeah. Same thing holds good here also. Okay. Fine. Any doubt in here? Shall we move to the next slide?
Yes.
Okay. So key flex fields in AR. So the first key flex field is your sales tax location flex field, right? So the sales tax location flex field validates addresses with your home country, and it calculates sales tax on your shipping address. So you must enter a value for the structure in the system regardless of the tax method you're using. Same way, the way in GL, no, we had this accounting flex field, right? Where you create your value sets and the segments and all that. So in AR, what we do is we have the sales tax location flex field. Okay, wherein you have to ensure that the location based taxation will function properly. So you must have values for each customer's address in your home country. So every component of your sales tax location flex field structure is mandatory when entering addresses in your home country, okay, from where you're running your business. Then we have the territory flex field. So here what we do is we use the territory flex field for recording and customized reporting on your territory information. So territory flex fields are also displayed in the transaction detail and customer detail reports in receivables. Okay, there's something called as transaction detail and customer detail report. So you need to this territory flex field will be displayed in that report. So Oracle Receivables provides a default structure for your territory flex field. So you can define up to 20 segments for this structure. So once you have defined your territory flex field segments, you need to define value sets for these segments. You're getting my point, right? Once you define, same is the case in GL also. You remember, Shrikant? Once you define your value sets, like your company, your
Yes,
department and account, same thing here, we define the territory flex field segments, and then you define the value sets for those segments. Okay, so we will be getting a better picture when we do the practicals on that. Then you must ensure that you have defined all your flex field combinations before you assign them. So we give all those values. You remember 100 for company. We had selected, that,
Yes, ma'am.
the numeric values for the company, and then the department, and then your account and line of business, and so on and so forth. No, that was in the GL. So here we'll be again doing the same thing, but not of those segments. There'll be different segments here. Okay, so you can choose the following sources, basically bill to site. So you use the customer's bill to address as a default territory flex field. Then you have the salesman, wherein you use the territory flex field assigned to your customer's primary salesperson as a default. Okay, then you ship to site, use the customer's ship to address as a default territory flex field. Okay, so this is your basic key flex fields in accounts receivables. Any doubt here?
ஸ்ரீகாந்த் புரியுதா?
புரியுது சார்.
Okay.
இது எதுக்கு தெரியுமா? ஹலோ,
சார் சொல்லுங்க சார்.
இது எதுக்கு தெரியுமா? இந்த இது இந்த டெரிட்டரி ஃபிளெக்ஸ் ஃபீல்டு இது பண்ணியிருக்காங்க இல்லையா, இது எதுக்குன்னா இப்போ ரீஜன் வைஸ் சேல்ஸ் அல்லது கஸ்டமர் வைஸ் சேல்ஸ் இந்த மாதிரி சேல்ஸ் எல்லாம் எடுக்கணும்னா, சேல்ஸ் ரிப்போர்ட் இது ஜென்ரேட் பண்ணணும்னா இந்த மாதிரி இதுக்கு இந்த ஃபீல்ட்ஸ் வச்சு இதுல இருந்து எடுப்பாங்க டீடைல். புரியுதா? அதுதான் டெரிட்டரி ஃபிளெக்ஸ் ஃபீல்ட். இந்த பில் டு சைட் சேல்ஸ்மேனு, ஸோ யார் ஆர்டர் எடுக்கிறா இதெல்லாம் ரெக்கார்ட் பண்ணுவாங்க இது. ஸோ அதுக்காக தான் டெரிட்டரி ஃபிளெக்ஸ் ஃபீல்ட் இது. புரியுதா? டு ஜென்ரேட் சேல்ஸ் ரிப்போர்ட் ஹெட் குவார்டர் வைஸ் அவங்களுக்கு சேல்ஸ் பர்சன்ஸ்க்கு கொடுக்கணும் இல்லையா, ஃபீல்ட் ஃபோர்ஸ் இருப்பாங்க, அவங்களுக்கு தே ஹேவ் டு ப்ரொவைட் திஸ் டீடைல்ஸ். ஸோ இதை கேப்சர் பண்ணுவாங்க, அதுக்கு தான் இந்த டெரிட்டரி ஃபிளெக்ஸ் ஃபீல்ட். சரியா?
Okay.
Ma'am, you can continue.
Yeah, okay, fine. So we'll move to the next
Ma'am,
slide.
just
Yeah, yeah.
one more.
Yeah, yes, sir, yes, sir.
இந்த சேல்ஸ் டாக்ஸ் லொகேஷன் ஃபிளெக்ஸ் ஃபீல்ட் புரியுது இல்லையா?
Yes, sir.
என்னது இது சேல்ஸ் டாக்ஸ் லொகேஷன்? இப்போ நம்ம சேல்ஸ் பண்றோம் இல்லையா,
Yes, sir.
சேல்ஸ் பண்ணா டாக்ஸ் சார்ஜ் பண்ணோம் இல்லையா,
Location wise.
அதுதான் சேல்ஸ் டாக்ஸ் லொகேஷன் ஃபிளெக்ஸ் ஃபீல்ட். இப்போ அந்த லொகேஷனுக்கு எவ்வளவு பர்சன்டேஜ்?
Okay.
இப்போ ஃபார் எக்ஸாம்பிள் இப்போ ஜிஎஸ்டி வந்திருக்கு, ஜிஎஸ்டி வித்தின் தி ஸ்டேட்னா சிஜிஎஸ்டி எஸ்ஜிஎஸ்டி அதை பிரிச்சு இது பண்ணும். வேற அவுட் சைடு இதுனா வெள்ளி இது, ஸோ அவுட் சைடு தி ஸ்டேட், ஸோ ஐஜிஎஸ்டி அந்த மாதிரி இது பண்ணுவாங்க. அதுதான் சேல்ஸ் டாக்ஸ் லொகேஷன் ஃபிளெக்ஸ். புரியுதா?
Yes.
அந்த டாக்ஸ் கேப்சர் பண்றதுக்காக.
Yeah, basically earlier you never had the GST, no? Before GST, different states had different
Before
tax percentages.
அதனால சேல்ஸ் டாக்ஸ்.
Yeah, that's the reason we have the sales tax location. Okay.
Okay.
Fine. So then next we'll move into receivables accounting event model. Okay. So here, see, an accounting event is a business event in an Oracle receivables that has accounting impact. Say, for example, creating or applying a receipt is an accounting event. Okay. So not all business events have accounting impact, right? See, say like signing of a contract is a business event, but it does not, affect the financial statements, meaning it does not have an accounting impact. So, but does that mean that, signing a contract is not a business event? That doesn't mean that, right? So basically, it doesn't have an accounting impact and therefore are not recorded as accounting events. So you can modify the accounting setup to create accounting for some events and not for other events, right? So basically you're, creating a accounting setup which has, an accounting impact of the business event. You got the difference here. See, you're selling a product, okay, and you're getting money for that. That is a business event. With that, it has an accounting impact. But you're signing a contract, with your customer, though that is a business event, but it does not have an accounting impact, right? You got the difference, Shrikant?
Yes, ma'am.
Okay. So, okay. So in Oracle Subledger accounting, the accounting events are categorized into event types. Okay. So these event types are grouped into event classes that in turn are grouped into your event entities. So the overall grouping of these components is called as an event model. Right. So the Oracle receivables accounting model is predefined by the users, and it includes each receivables transaction type, that is your event class, and its life cycle. So you should understand the receivables accounting event model, because the model classifies receivables accounting events, which are the basis for creating subledger accounting. Okay, so as a foundation of the event model, receivables predefines the event entities. Then event entities enables Oracle Subledger accounting to handle the accounting for similar business events in a consistent manner. So the event entity for receivables are your transactions, receipts, adjustments, and bills receivables. Okay, then this figure also describes the event classes and the types the receivables predefines for the transaction event entity. Like, you know, the under the event entity transactions, you have the event class of, like, say, invoice, credit memo, you know, and your miscellaneous receipt is then for that event class you have this event type where you create an invoice and then you update an invoice. Then under your receipts you have receipts and miscellaneous receipts, wherein you can even reverse it and then update it. So these are your event types and these are your event classes. Okay. And again, under adjustments, you know, whatever, if there is an adjustment to be made in your receipts, you do that adjustment by creating, you know, an adjustment entry. Okay, then under the bills receivables, you create, once you receive, you create those receipts and update those receipts. Okay, so these are basically your event type, event class, and event entity. So are you clear with that? Any doubt here?
No.
Okay, so this is how your event model
Srikanth,
yeah.
Sir.
ma'am, you can continue. Sorry.
No, sir,
You
you
can
want to
continue.
ask him anything?
Hello?
Yes, sir. You want to ask him anything? It's okay.
No,
You can
no,
ask
you
him.
are telling something. Oh, okay. Srikanth,
Sir.
event கிளாஸ்ல ஈவென்ட் கிளாஸ் இருக்குல்ல, இப்போ நீங்க செகண்ட் ஸ்லைட்ல ஒரு டவுட் கேட்டீங்கல்ல,
ஆமா சார்.
ரிட்டர்ன் ப்ராடக்ட் ரிட்டர்ன் பண்ணா,
Yeah, once the products are damaged.
Okay, sir.
ப்ராடக்ட் டேமேஜ்டு, இன் கேஸ் ஆஃப் ப்ராடக்ட் டேமேஜ் இஃப் இட் கெட் ரிட்டர்ன். இப்போ இந்த ஈவென்ட் கிளாஸ்ல எது அப்ளிகபிள் வரும்? ஏதாவது ஐடியா இருக்கா?
Adjustments அதுவா சார்?
Correct.
அட்ஜஸ்ட்மென்ட்ஸ் வராது.
Sir, okay, sir. You continue, sir.
Yeah. No. Oh, you are going to explain, no?
No, sir. You tell him, sir. It's okay.
Okay.
Yeah.
இல்ல ஒரு ஜஸ்ட் ஒரு எக்ஸாம்பிள் சொல்றேன். சோ அந்த இப்போ ப்ராடக்ட் ரிட்டர்ன் பண்றோம் இல்லையா?
Yes, sir.
கஸ்டமர் ரிட்டர்ன் பண்றாரு இல்லையா, டேமேஜ்னு சொல்லிட்டு.
Yes, sir.
அது ஒரு ஈவென்ட்.
Okay, sir.
புரியுதா? அந்த அந்த ஈவென்ட் என்டிட்டியில ஈவென்ட் கிளாஸ் பிரிப்போம். அதாவது இப்ப ப்ராடக்ட் ரிட்டர்ன் பண்றது அது ஒரு ஈவென்ட் கிளாஸ் கொண்டு போவோம். ஓகேவா? அதே மாதிரி டாக்ஸ் டிஃபரன்ஸ் ஆசம். ஓகே சரி மேம், யூ கேன் கண்டினியூ மேம்.
No, sir. It's okay. You can explain him.
Hello?
It's fine. Sir, you explain him.
You can continue.
No, you explain him, sir.
No, you can continue. No, the voice is breaking, no? So you can continue, ma'am.
Okay, fine. Okay. So we'll move to the next slide, which is your auto accounting structure. Okay. So here, see, the auto accounting is a very flexible and time-saving feature that automatically creates your general ledger accounting flex fields. Okay, so you can set up auto accounting to create accounting flex fields that meets your business needs. So when you run auto accounting, the receivables assigns valid accounting flex fields to your invoices and credit memos. The receivables also automatically generates valid accounting flex fields for your, say, for your, you know, freight, your auto invoice clearing, your revenue, your tax, unbilled receivable, and unearned revenue accounts. So this basically controls how your accounting flex fields are created and defined. So the default accounting that auto accounting creates is considered interim meaning temporary, you know, for a short period only. So receivables integrates with Oracle Subledger accounting, which is a centralized accounting engine, you know, which accepts the default accounts that auto accounting derives without change. So you can modify the accounting rules in Subledger accounting to create accounting that meets your business requirements. So basically, see, these are your information source. This is your, tables. These are called as table names from where the information is received. Okay, I'll be explaining with example as to how this works. But first, just let me explain the whole process. Okay, so receivables, automatically creates default accounting flex fields for your revenue, freight, and all these accounts. right? And then auto accounting also creates a proper unearned revenue or unbilled receivable accounting entries, which you need when you are invoicing and when you're using the invoicing and accounting rules. Okay, I'll be talking about invoicing and accounting rules also in the upcoming slides. Okay, basically, here you can quickly enter your invoices and credit memos without worrying about entering the correct account. So you must define your auto accounting structure before you can enter invoices and credit memos, and you can only define one structure for each type. Okay, so here your auto invoicing clearing account means wherein the auto invoice uses the auto invoice clearing account for your imported transactions. Say Oracle receivables uses the auto invoice clearing account to store any differences between the specified revenue amount and the quantity for import invoice lines. So receivables only uses the auto invoice clearing account if you enable the create clearing option for the batch source of your imported invoices. So you'll be seeing all these options in the instance. So we'll be clicking on those options, right? So you'll get a better idea on that. Then you have your freight account, wherein this controls the account in your general ledger to which you post your freight amounts. So you can use a constant, okay, or your like your customer bill to site, or your salesperson, or your transaction type, and all this. So then you have your receivable, wherein the receivable account controls the account in your general ledger to which you post your receivable amounts. So you can use transaction types or customer bill to sites to specify your receivable account. Then you have your revenue and your tax. Okay, the same way you'll be like, you can give any of these information source table names to specify, to take data from these table names. So, and you have your unbilled receivable and your unearned revenue. So unbilled receivable, here in this account, the Oracle receivables uses the unbilled receivable account for transactions that have invoicing and accounting rules. Okay, it is these two areas, the accounts, that we'll be using the invoicing and accounting rules, which I'll be talking about shortly. So if your accounting rule, recognizes revenue, and here this REV is called as revenue, and REC is the receivables. Okay, this is the short form that I just have mentioned here. So in your unbilled receivable account, see, you can select constant customer bill to site or salesperson transaction type and standard item value for your unbilled receivable. Suppose if you select, the standard item values for your unbilled receivable account. Okay, the Oracle receivables uses the revenue flex field that you would specify in the setup. So suppose if you select salesperson, receivables uses the salesperson receivable flex field. Okay, you'll get a better understanding when I show you the example. I'll just finish with what unearned revenue means. Okay, here the unearned revenue is where the receivables uses the unearned revenue account for transaction. Again, as I mentioned, for the unbilled receivables, it uses the invoicing and accounting rules. So suppose if your accounting rule recognizes revenue after